Good morning and welcome to Trading with Larry. Good morning, everyone. I'm joined today by Clint Brewer, my partner in crime, my head analyst running the show behind the scenes. And I appreciate you and a happy, healthy 26 to you and your family. And here we are, the fourth day of the year. Three up days coming in after four down days, and we're talking equities and markets are back to that. I think that robotic program theme where you can just look at the market and know one stock is down and the other is up. And today when the market was down, Nvidia, which was terrible yesterday, is up, and then if the market stabilizes, that'll go down later, and we're back in that program mode. And a lot of stuff to talk about with memory going absolutely ballistic because of Jensen. I don't get it. And I just wanted to know your thoughts, just in general, of the overall. We'll start with the equity landscape, and we'll move from there into a lot of other exciting areas that look pretty unbelievable at the levels that they're at. So I'll throw it to you.
Yeah, one thing I would watch to start the year. And this is something we talked about at the end of last year, is that you had a lot of the Mag Seven names lagging. You had Nvidia was well off the highs, you had Microsoft well off the highs, um, and what you've seen is to start the year. Yeah, some of these semiconductor names, are seeing a big jump. But what's really been happening is you look at sort of this the theme since the end of last year is that you've had this rotation into value, which I think is kind of interesting. And you don't really, it can be hard to notice because if you're following just the S&P, the S&P can trade weaker if some of the Mag 7 names are lagging behind, but you can see bullish action in other segments of the market. And that's sort of what, I don't know how long it'll last, but that's what's characterized at least the first several trading sessions of the year. So I don't know if that's something that'll last or not, but I think it's interesting to see that value side of the market start to perk up a little bit right here, because those have been, broadly speaking, laggards on this rally over the last couple years. And I think that feeds in maybe into the oil theme a little bit that I know you guys were talking about yesterday.
Yeah, I listen. The oils have acted pretty well, but as far as an overall like macro view on U.S. Equities or equity indices, I don't think the market could go very far without the original culprits that have created this move over the last bunch of years. And I do agree with you that the trade is to be short these names. I like to be short Palantir here. Got back above like 180. I don't know exactly where it's trading at this second. We could look at it. I like that on the short side. And I like Mag 7 short in general. I just think it's every day, it's kind of something else. Like yesterday, it was, NASDAQ was lagging. And then all of a sudden, right out of the gate, they're buying. I mean, Micron, I've traded Micron very heavily in my career. I watched it go from about 200 down to $2 with J.R. Simplot, who owned the company but was the largest potato farmer in the world, supplying McDonald's with every potato that they bought. And the guy literally got annihilated. He was out on margin on that, and he got margined down. And then, yesterday I looked at it, and it's like a $400 billion company. I mean, it's an incredible ride or move. And I think people are, listen, it's this. I'm going to just say this. I talked to a bunch of people probably who were watching the podcast, and we talked and we're like, oh, this year, it's going to be different, and da 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 da. There's going to be great trading, and for me, it's only this will be the fourth day in, but the trading is, the same. Like yesterday, out of the gate, the Nasdaq was up like nothing, 30 points. It ran $100. They were moving Nvidia $3.50. It's the biggest stock in the world. It was moving like $3.50 in like 10 minutes. So it went up, then it went back down because they didn't need it in the market. Um, so got to keep an eye on that. But it's interesting. We're up 1% for the year. It feels like we're up like a billion. So I think there's a lot of work to do in here, a lot of work. And I think the culprits are out doing the same things that they've been doing, and we'll see if it holds up. And we have a lot of exciting things coming up. You have unemployment, which I don't really think ADP came out today. I don't know if you caught that number, pretty much in line. But I mean, I don't know how they could really gauge this unemployment number as anything, that's kind of real. So I don't know if that plays. But then behind that is the Supreme Court. I wouldn't say ruling, but I guess their white paper or whatever they're going to come out with on direction on that. And I think what would be interesting to talk about, just to get your take on what you think is going on with tariffs. We haven't heard a word about it. We haven't heard a word about China deal. We didn't hear a word about any deal. And it seems like it's so back burner right now that they're not even, mentioning it. Maybe because we're taking over Greenland, but you know, uh, you know, and I don't know. We've never needed Greenland before, but now all of a sudden we need it, and we think it's ours. I mean, I don't know. Whatever. It's crazy, crazy stuff. But the tariff thing to me, don't you feel like it's on the back burner? Like I felt like last year we were a lot of, you know, news headline driven interday BS, with, you saw crazy moves off of, you know, stuff that people, I guess, are not paying attention to or care because none of it ever came to fruition, right? There's no China deal. There's nothing even on the burner. Last year we spent the whole year trying to get a China deal, sending our delegation there back and forth, and we got nothing. And now, she is smart enough to know there's 2 years left and a very good potential for a split, house. And I think they're just going to wait on the sidelines. So I don't know how much this tariff ruling really means with, us not really, making deals. So I was wondering
Yeah.
your thoughts on that.
Well, one what I would say is that China is kind of known for playing the long game, taking the longer view. And so, yeah, I mean, for them, maybe they just want to. They're not really going to do anything, and it's hands off till there's maybe a change in the administration. They can afford to wait it out. So Friday could be very interesting. We talk about how low volatility's been these last couple of days. I mean, when I've been on the phone with you and we're looking for spread trades, I mean, there's just been very, very little premium, which speaks to how little volatility there's been in the market. And who knows, maybe Friday's the day that we finally get a change because, yeah, we've got the payrolls report, but then that is, like you mentioned, that's the day that the Supreme Court has set their, call it opinion day on tariffs. So that's one tariff headline. The other thing that I would note with tariffs is that I don't, whether it's an agreement or not or whatever you want to call it, but the U.S. and China did reach this framework where they hit at least a pause on the hostilities for a year. They backed off on some of the incremental tariff increases, and they reached this agreement. It was back in November that lasts a year, supposed to last a year. And so in my mind, like the clock is ticking. And I think that's kind of interesting when you look at having that in the back of your mind, when you look at like what happened with Venezuela over the weekend. When you look at, you mentioned like Trump's comments on Greenland, I would have said, it's total BS hot air that, these prior comments Trump's made about wanting to acquire Greenland, and now I'm like, well, okay. What could happen next? Maybe you do have to entertain that possibility, but there's reasons why there's would be an interest in Greenland when you think back to the things that we depend on China for. And again, the clock is ticking. We've got 10 months left under if this framework holds up of this truce that I'll call it a truce. I won't call it an agreement. I'll call it a truce that they reached with China back in November. So yeah, I mean, and here's the other thing: like narratives shift all the time, and it just tariffs right now they matter. Well, they mattered a year ago, right? And now they don't matter. And I know this sounds really stupid to say, but it won't matter until it starts to matter again. You know what I
Right.
mean?
Well,
And like,
that's trading and that's the market. It's funny, that you bring me to think about this. It's what I always say. One of my, my sayings that I've always come out with is sellers live lower and buyers live higher, and that's the market we're in. And I've been doing this for 40 plus years, and I've never seen a time where that's the case. Right now everything. It's funny. I happen to be up a little bit in the middle of the night, and I just looked at the market for probably about 10 minutes, and like it looked like the market was closed. And the same thing this morning, like they threw egg all over the market, trying to get the market down. And I looked up, and like the low on the S&P was down like $8, and it's positive again. And this is day four after 4 down days, and it just seems like the culprits are the same. I'm not going to say it's Ken and Jane, but I think it's a product of retail. Like, I don't know what happened at the end of the year. Retail left the building. I think because the market was going lower, they couldn't buy it, and then they were able to push the market down with some, you know, basically liquidation of portfolio, etc. And then you come into the year, and Friday was actually negative, but the S&P ended up closing positive. It looked really shaky on Friday, and then they brought the market all the way back. And then Monday, obviously, big rally, and yesterday, huge rally. So, and when we talk huge, we're talking. Let's equate this for a second to volatility, right? So volatility is at 14. Okay, now, this is what I would say for people watching out there now. Volatility is 14. I look at volatility at 14 as sort of being correct, potentially for the overall environment when we look at it over a week or a month or even a year. Obviously, it's going to change a lot during that year, basis news or, market action. But for right now, 14 volatility is not correct for day over day options. And that's why for people that are watching that are subscribers to the S&P Trader, that we've held off so far this year. And, I'm going to look for a trade today, but I can't I can't see it because, like yesterday, we were looking at calls, and you know this because you were on the phone with me. Like 20 up was like $1. They went to like $20, a little more. I mean, they're just not correct on day over day vol. They're correct with pricing out the curve the way they are for right now. But day over day, for zero DTE, a 14 vol is not correct for what we're moving. You know what I'm saying? Because if we're moving a percent ish a day, which we've done the first 3 days of the year, both up and down, the last couple up, it doesn't put the option pricing correct for day of options. So that's why we're really laying low. Now, out on the curve or doing something at a 14, 15 vol a month out, totally different trade. So I want people to understand that. Like today, market's going to open flat to up or whatever they're going to do. We could go down 20, 30 handles. We're talking about a $7,000 animal right now. The S&P is at 7,000. It's actually scary for me to say. And I'll say on the air here, I'm going to freak you out. First, I'll ask you to guess. What was the fill price on the first S&P that I ever traded in 1984? What do you
Oh,
think the
geez.
price was?
First fill price?
Yeah, it's 7,000 right now.
Uh, I
Hmm.
would say like 100,
You
200.
got it. Like 126. I mean, come on. Hey, it's madness. I mean, it's just an unbelievable bull market, crazy run. Over years and years and years and years. And, it's funny. I was out with a buddy last night who has one of the biggest trading firms in the world and extremely successful billionaire. Okay. Who started with nothing. Great guy, And when we were leaving, we were chatting when we were waiting for our cars to come from valet. And he turned to me. He goes, the one thing that I can't understand, he says to me, and he's smart, is is the market caps. He goes, I can't understand 4 trillion, 2 trillion. He worked for a company called O'Connor. I don't know if you're familiar. They were a huge floor. They were bought by UBS Swiss Bank. They're like Susquehanna before Susquehanna. All the
Okay.
guys that started Susquehanna started at O'Connor. It was the best firm. They sold their firm for like $200 million. Okay, which sounds like a lot. That firm is worth 10 billion at least. So that's what's gone on, and that was only 25 years ago or 23 years ago. So exponentially the numbers have just exploded, and that, when I left, that's what left me, like, thinking, like, it's unbelievable. Like, I looked at Micron, okay, and I believe, I got to double check this, but I believe it's like a $380 billion company. So I would tell you that Micron wasn't even 5 billion when we were trading it. Wasn't even 5 billion. So, I mean, yeah, 386 billion. I'm telling you, this company was 5 or at the most 10 billion. A billion dollar company wasn't even considered mid cap. Okay. So now you got junk, trading at a billion. A billion is like the old, you know, under 100 million. So that's what he left me with, to be like the most shocking thing is, $5 trillion market cap, 4 trillion. And really, if you look back on it, um, I would say 6 years ago, there wasn't even a $1 trillion company. Seven. I don't, when did Apple cross a trillion? That was the first one. And I believe that was no more than 8 years ago. I mean, this has all happened in the last 6 or 8 years. I mean, and the market caps are unbelievable. So, and we haven't really, other than the tariff BS tantrum, we haven't had any real correction. Maybe we've had a 4.5% correction in, November, and
Right.
other than that, we haven't had anything. And my belief, from what I'm seeing in the market, and it feels like we're up we used to call it a goo plex, so much, but we're up a percent. Like the S&P's up a percent. I mean, they could wipe that out in 2 seconds. So that's the thing that's a little bit, interesting. And
Yeah. Here's what, and I'm gonna get your thoughts on this. And 2018 was back when Apple first crossed a trillion in market cap. By the way, that was 2018. Um,
wait, time out. 7 years ago, it's gone from 1 trillion to 4 trillion and a half trillion. Okay. It's gone up 4x in 7 years. I've been doing this 40 years. We've never seen anything like it. And then I'll let you get to your thought. But this is the thing that's really the most scary. I was a specialist on the floor, which meant I made markets. Okay. I had to make fair and orderly markets for the public, or they would come in and, one, fine me, two, take away my product. We also made markets in 1999. This is really true. 1999, a guy, Randy Dorfman, and I, Randy's a great trader at Spear Leads. We were at Spear Leads. They gave us a book because we were the largest specialist of NASDAQ stocks during the internet bubble. Okay. So I was making markets. Okay. But we were responsible for keeping fair and orderly markets. What has happened here is crazy. Like, listen, if I was a specialist in Nvidia and was making market, the stock wouldn't move $1 a day. I'd have 100,000 every 10 cents, every 20 cents. But what's happened, Clint, is the front running algos want no volume. They want to rip stocks up and down, and they want to, you know, they want to make money. And then one more thing, I know I interrupted you, but here's the one that we also talked about at dinner last night. You ready for this one? How in the world, just explain this to me. How in the world is Jane Street making 25 billion, Citadel making 80 billion, Susquehanna making 75 billion, this other company, Hudson River, making 50 billion, another company making 40? Who is losing this money? Who is it? The public just giving up money? Like they're saying the public is killing it. I just can't. How are these firms almost riskless, okay, almost riskless, making this kind of money? It's riskless. They're not like putting positions on and betting on the next biotech stock. They're just on the bid and offer on, on ticks. It's incredible. And then,
They see the order book, right? Like they're taking, you don't realize it, but they're taking it from retail. Like you see your fill, like your fill maybe could have been 1 or 2 pennies better, but they went to someone else's pocket, right?
right. And the public is, well, here's the thing. Right now, the public doesn't care because if Nvidia is trading at, I'm making it up, 185, right? And you go in to buy it, you pay 185.10, okay? You don't care that much because you're able to sell it at 185.70 or 60. But each one of those dimes adds up to billions. And that's what's happening. And I'll tell you this. So, Spear Leads and Kellogg, the firm I worked for, we were the largest specialist, which means we saw everything. We saw all the orders. They came through us at the post of the New York Stock Exchange or the American Stock Exchange, the options exchange, all over the place. I worked there 11 years. We didn't have a losing month in 11 years. Okay. What does that tell you? And we were doing all of the trading by hand. Now it's like this. It's like an algorithmic craziness. But maybe that, like, I'm just trying to figure out who do you think's losing? I mean, I know it's the public, but like they're claiming the public had a good year last year, and I just don't. I mean, I don't know if it's made all by a handful of public guys, but every single person that I know, and I would call it public, but high net worth public, is freaking out about their positions. They want to understand how to hedge, how to do a collar. They're flipping out, okay? And they didn't make a lot of money last year. They did not. So that's what I'm trying to gather what has gone on here. You know what I'm saying? And the market continues to roll, going higher. I don't think people are making tons of money. And now, like, they're running into Micron and all these things. They're going to get hammered. Listen, there is so much public in silver and gold right now that never had it 6 months ago or even 4 months ago, that it's beyond belief. I don't know if you see that, but it's
Yeah,
beyond belief.
so that was going to be my point, is that a lot of the, call it, lack of volatility that we've had since pretty much the second half of all of last year, it's been creeping up elsewhere, and some of these moves should be very concerning because, like, all right, yeah, so the public's finally getting involved in silver and gold, and silver and gold have been going on just an absolute tear, and everyone's enamored with it, right? Like everyone's, if you happen to jump in anytime in the back half of last year, like all you're seeing right now is dollar signs. But I think what you got to do is take a step back and say, what information is that move relaying to you right now? Like why in the world would gold, which has absolutely like no use other than being viewed as a store of value, like why is gold going through the roof? Why
Well,
is silver?
here's what I would say. Okay. Actually, I mean, silver is through the roof. Gold is up. But if you look, like Eric and I talked about, that ultimate high was like 4,400 and then we came off and whatever. We broke that high again. Okay. But it's not significant. Like, go back if you could pull a chart, like what the old high is only like 100 points from here, or maybe even less. And I think, coming into Monday, gold was in the channel at like, 4280. It looked like it was in jeopardy. And I am still believing heavily that gold will be below 4,000. And I think silver will be below 50 this year. And I think people are playing with fire. They don't understand what it is. But what I'm going to say is this is the new world that we live in. And this is the world. They picked out Bitcoin and they were able to jam that thing up, right? And there was no liquidity. And then it dropped 40%. And now it's come back a little, but it's not a buy. It's untradeable. It's probably going to break the low again. Okay. It's not the tradable thing. So these maniac retail guys run into the next thing that they think they can manipulate or maneuver because of, lack of sellers or whatever the reason is. And, they don't give up. Like even today, gold's rallying, now off the low. I mean, if it goes out on the low, it's not that good. And if you look at gold right now, it's only up 1.5%. Silver's up a lot more. Silver was up 13% coming into today after going up 170% last year. I mean, and nobody knows what, Eric and I talked a little bit about this, what limit down is, where you're not even going to be able to get out, So, that's why I believe that the exchanges have raised margin and are concerned, because there's going to be a day, and I've seen this in pork bellies, live hogs, all different markets that go limit down for 7 straight days, like where there's no trading. I mean, people's lives have been ruined in that stuff. And I'm not saying, that's the case. And, no one believes that right now because it's in a euphoric bubble. But this is like year 4. And I don't, go back in silver on a chart. I don't think it crossed 50 till like a month ago, maybe. When did it cross?
It hit 50 in like 81 and 2011, and those were like parabolic moves higher at the time. And then just in the back half of last year, or recently, last few months, it went above 50 and it stayed above for now.
Right, but what I'm saying to you is it went above 50 only a month or when did it hit 50? Like, can you pull a chart on it? Like, it hasn't been like 2 months. The thing is doubled, like almost. It's an incredible move. And if you bought silver 2 months ago, you made a better return than basically the S&P 500 in the last 7 years. I mean, and no one wants
October is when it started hitting 50.
Right. So November and December, 2 months. 2 months, and the thing went up basically 60 more percent. So, and then when it comes in 3%, everybody's crying. They're like, oh my God, what happened to silver? So I think there's a lot of risk. And I think this trade, it's not going to be like a simple shot, but I think selling silver at $80 or even $70, I mean, what is silver? Silver is like a hunk of junk. I mean, it's not, it's not even a precious metal. I mean, they call, it's an amazing thing,
Here's so forget just what the trade is for a minute. When I take a step back and I look at the move that we've had in gold, really going back to the end of 2023, more recently now silver, you had the dollar off to a historically weak start to the year last year, and it's hovering near the lows. Like to me, that like the action that's happening outside of the stock market is telling you something, and that's where. So to tie it all back together, like look at what is happening in Japan right now with Japanese government bond yields. If you had that happening in the US, you know how freaked out the market would be right now? If you had that kind of a move higher in bond yields that Japan's seeing right now, I think all like when I look at what is happening in Japan, when you look at the surge in gold and silver, when you look at the decline in the dollar, like to me, this is where you're seeing different areas of the markets outside of stocks finally flagging major concerns on debt deficits, rising money supply. You get the Fed back to not doing QE again, expanding the balance sheet. Like, to me, this is all from just a pure macro lens. A really big warning on what's ahead this year. And I think what you're seeing happen in Japanese government bond yields, if you start to see that sort of action come to US bond markets, like, to me, that's one of the biggest risks facing the stock market this year.
Oh, listen, but here's the weird thing, though. You talk about Japanese bonds and having risk. I think the Japanese bond move actually worked the opposite for Japanese equities. It actually put everything back into normalization. And what Japan, I guess, through their new leaders there, economically have realized is they, for 35 or 40 years, kept interest rates negative, thinking that would attract basically people in to the equity markets, and it worked the opposite. People were freaked out. Now you can get return on a 10-year JGB, and people are running into equities and sending Japanese equities. Last night wasn't a great night for Japanese equities, but sending Japanese equities to pretty much all-time highs. So it's weird to look at, but this is, I mean, and the US equity market is guilty of this also, but I see it more in the metals or in these risky assets that they're just blindly buying, and they don't listen. I went to dinner with a guy, four guys, okay, and this guy told me he's loading up on silver. Now, it was $60, so he's still up money, but listen, this thing started the day up 13.5% for the year. It's now up 7. It might be down on the year by the end of today. I mean, that's how crazy this is. And the I mean, come on. The price of silver, it shouldn't even be above 50. I mean, 50 is crazy for silver. But it's a unbelievable bubble. I mean, you don't see this unbelievable, like, where, like, I don't understand. The United States government supposedly owns a ton of silver and a ton of gold, right? In Fort Knox or whatever. Why don't they blast it into the market? Why is Besant sitting there and letting sort of this go on? And Clint, to me and you, growing up in the market, gold was inflation. If gold rallied, everyone was like, inflation. Inflation, is it like back to zero? For somehow they manipulated it back down to zero. But what I wanted to get to is the retail guy who's trading gold today isn't looking at anything. He's not looking at interest rates. He's not looking at the US dollar. He's not looking at anything. He's just buying blindly because he thinks it's going up. And then, like you said, is it what is it? Like, there's really no value. Like, it doesn't pay you interest. You have to pay to store it. And the only way you're getting out is if someone wants to pay higher, which is what's happening. So, I mean, that it's very, very concerning. But the one thing I'll say, you know, is that, I mean, silver is absolutely crazy. I mean, and I think the exchange knows by raising margin requirements multiple times that there could be a big issue here. But here's what I want to say, and I know I'm chatting a lot, but I'm going to give it to you. But here's what I want to say, okay? GLD, which is the gold ETF, is setting record volumes on a daily, okay? Which is scary, okay? But they raised their margin requirements in gold and silver, or even SLV setting records. But I can do a double leverage silver product. I can get triple leverage on silver. Okay. I could get double leverage on silver and gold. I could get a regular ETF. So even though the exchange has raised margin requirements to protect their butt, nothing's been done here. You know what I'm saying? We could double leverage silver right now. Right now. Okay. So that's what I think has happened. So without the advent of these ETFs, these moves cannot occur because listen, to trade gold, you needed either you needed a futures account. You couldn't buy it in an equity account, really. Now you can buy the ETF as much as you want. You can put $10 million in gold in 1 second by buying the ETF. So isn't that really what has happened here? That it doesn't really have to do with supply, but it has to do with the fact that the guy who never had access to gold and silver for years and years and years can now buy an ETF. So, you know, every
Same,
person
same with
and their
Bitcoin, right?
mother, Clint, every person and their mother is calling their broker to buy gold and silver. And they're like, okay, there's a great ETF, SLV. So now that person that never had access to silver, that had to buy silver coins or gold coins, can now buy the ETF. And they're all in. Everybody's all in. So that's what I see. And I think we're not putting enough credence into the fact that the exchange is worried that there's going to be a major blow up. Okay. That's why they're raising margins the way they are. But the equity markets are inviting you to trade single leverage products, double leverage products, and I can tell you a triple leverage product that you could trade that gives you 3x silver, both long and short. So I think that that's a lot of what we're seeing here is the advent of retail, coming into the market and just going crazy. But literally, it's prior to. I mean, silver opens at 8:20 on the floor, even though there's no floor anymore, and it closes at 2:30. But there's no floor anymore. But silver, it's not even the opening in the United States, and silver has given up half its year. Not that it's only 3 days, but it's given up half its year on the way to giving it all up in one day. you know, and then it's going to be a big problem moving forward, I think. I mean, and I look at silver and it's $76. I mean, how many days has there ever closed above 76? Three in
Yeah.
history, two. So
I,
I'm sorry.
no, well, I was just going to say, I will say this. I mean, we're clearly like getting beside the drivers of what's behind gold, silver, whatever. Like the volatility is definitely shifted. Like the volatility is not in the stock market right now. The volatility has shifted into these commodity markets. And one thing, just I want to get your take on where we're going to see some more opportunity. This is where we're going to see the opportunities this year. But one thing we did a year ago in One Ticker Trader was we expanded the opportunity set. We expanded the trading themes away from just single name equities and into other markets as well. So, while we do target individual stocks there, we've added things like Bitcoin. We've traded oil, natural gas, and housing names, bonds, and so on. And we're One Ticker Traders coming off its best year ever. Now, a lot of that was around the trade war, but we were able to kind of shift away from equities in the back half of the year and to other markets. Like for instance, I think of our last four trades have been USO, and we've closed three of those four trades with a gain. And so you've seen that volatility shift away from the stock market into commodities. And to me, as we're sitting here talking about silver and gold, I mean, are those the places where you're going to kind of stay at this year, at least to start the year?
Oh, 100%. I think, listen, a friend who's probably watching is like, "Oh, you may be early, blah blah blah," and I may be a little early. I mean, now we're in the saddle and we're about to add to positions here. But what I would want everybody to understand that watches this show, okay? Options are your greatest friend. Everybody in the newsletter industry or even in the trading industry has very little knowledge of it. But the beauty is, like, listen, I wanted to be short silver. I'm not touching the futures. It's crazy town. I mean, back when I had a big hedge fund, maybe I would, because I had a lot of capital. But right now, doing options, you buy an option at 3, okay? That option, okay, the most you can lose is 3. Silver could go to the moon or whatever. But when silver, like, I think you're going to see under 70, by Friday potentially. I mean, if it keeps going like this. and it'll be down on the year, your option could triple in price if volatility blows up. So I want people to understand that the beauty of what we do where we are at the Opportunistic Trader is so much of our expression of trades is done through option spreading. And what our most important thing is to define the risk for the customer, okay, and put them in trades that we think make sense. So, all of that said, that's what's the beauty of this. So, yeah, I'm on here and I'm talking about gold going down and then it goes up 100 in a day, which has happened. Okay, it happened on Monday. We got hurt a little, but not a lot. And we're still in the trade because we still have the option, going out in time a couple of months. So I want people to understand that, and that's the beauty of being able to express your view with defined risk with options. So I think it's important for people to know that. And then, like, kind of looking back on last year, we had a positive year pretty much in all our products that we trade. But I would tell you, if when we were on the air in March, I thought this would be the greatest year in trading history. I really did. I thought we'd sustain high volatility. I thought that things would get shaky and uncertain, and it didn't pan out that way. But we ended up being okay. But I thought we were going to make hundreds of percent last year. I mean, I really really did. But then everything sort of stabilized. But I'm like looking at my screen, and I traded silver. You know, over the years, not a lot. And like I said to you, a lot of what's going on, Clint, is the access given to retail maniacs to trade this stuff. And like I said, no one ever talked about silver. No one. I'm out to dinner. It's insane. You would think we were like celebrating a Super Bowl win. I mean, but
It's the new silver's the new meme stock.
it is. That's what I'm saying. But you know what? The one thing I'll say to you, no one sells, and no one sells equities. I was with someone when I was shooting a webinar, and they have a lot of Bitcoin. Okay. And she said to me, she goes, I'm not down money. I go, what do you mean? She goes, I'm just not looking at it. I mean, what is that? Like, literally, I'm telling you, I'm not looking at it. I'm not selling it. So why look at it? And that's the mental mindset of this market, why we could end up being in a lot of trouble, I think, but we'll see, we'll see what happens. Trading has, been slow. I mean, the market's it's back to the same shenanigans, the same rigging, the same buying, like yesterday they didn't need Nvidia, so they left it alone. So today they buy Nvidia. You know what I'm saying? That's the story. And it's funny, silver's down about 5+%, but silver was up 6% yesterday. So it's just giving back yesterday. It'll be interesting to see if it gives back yesterday and the day before. I mean, the moves are unbelievable. 13.5% in 3 trading days. That's pretty good, right? And
Yeah, yeah.
then
No, go ahead.
no, I was saying, S&Ps are up about 1% for the year. I mean, we can't continue this run rate of going up because the market will be up too much, too fast. Because, this will be the 4th straight up year. And if we're up double digits this year, I think people would, obviously if we get there, they'll want more, but they'll celebrate that. And, we've got 10% or 15% of that in 2 trading days. So, I think there's going to be some trading. I would be worried about Friday. Not worried, but I'm just thinking, Trump is at the level of unhinged in a way. You don't know what's coming next. Thank God it's bluster. Like, the White House basically said yesterday they didn't rule out taking military action. what are we going to do? I mean, come on, we're going to.
On Greenland.
Yeah, I
Greenland,
mean,
yeah.
I'm just saying, but it's all, whatever. And I think the market's sort of, disregarding a lot of geopolitical, a lot of different things. So, We'll see.
The stock market might be disregarding it, but I think this is behind a lot of the moves that you're seeing and some of the other things that we're talking about, whether it's the metal space. One thing I just want to bring up really quick. I know you and Eric talked about it yesterday. I just want to get your thoughts on the oil market, just because one thing I noticed, and I'll get your take on this just from your experience, just from a pure trading aspect, is that going back to late last year, like the news was always bearish on oil, and oil always seemed to just be grinding lower, just grinding lower and lower. Whether it was Trump's demands to drill, demand OPEC increasing production, and I remember in December, if you brought up any oil headline, it was fears over a supply glut heading into this year. And then you had the Venezuela stuff happen, and that was supposed to be bearish for oil because now all of a sudden Venezuela, that's on, whose production is slow to a trickle, we're all of a sudden going to go in and, turn it around and unhinge the pumps and whatnot, and oil's going to start flowing again from Venezuela. So that was your next bearish take. But then all of a sudden, like oil stopped going down on bad news. I mean, it's not had a huge jump, but it's been rallying off the lows, including the initial reaction to the Venezuelan news. I just always think it's interesting when you see something that's been in, this prolonged downtrend, and the news is still negative, but the market stops going down on bad news. Is that like to you? I mean, is that a character change in when you're looking at an asset class?
Yeah, I would say yes. I mean, oil actually was up off the news, but now traded lower yesterday and today. Came off the low today. It's $56. I mean, I think the risk reward is skewed definitely to the upside, meaning, you could get long this thing again through options. Um, I just think it has this inherent put that Trump wants oil prices lower, which I don't know why he gets what he wants. But we're running late in the podcast, so I want to wrap in a couple of minutes. But what I want to say is in Venezuela, okay, China's there, Russia's there. Okay. They both have massive interests. Okay. How are we going to just walk in there and do whatever we want? I don't see it happening. And when they swore in the vice president, China and Russia were sitting in the front row and we weren't even there. So I just don't, I mean, I just don't see how we're getting so much oil out of there, and especially not quickly. And that story hasn't been written. Also, you have on top of it for oil as a kicker, you have the fact that Iran is, you know, whatever we did to them didn't stop anything. Okay, so they may send Israel in again to strike. But that's overhanging the market. So I like it here on a risk reward basis. But I do think um, everything has continued on here as is last year and the year before with these linked programs. Like when we talk, we're like, okay, Nvidia's up, what's down? Like it's like they just do this thing all day long, and then the market gets worse and Nvidia gets better, and then the market goes up like yesterday, and all Nvidia has to do is go up a little and it explodes up the market. So they're rigging up the tape by doing all these programs. And I'm just hoping at some point they toast these guys that are doing this. And I've been doing this business for 40 plus. I say it all the time. We've never seen anything like this. I mean, this is just crazy town. It's like, okay, today as Dow is good, Nasdaq's bad. Oh, okay, then we'll reverse that. It's like not like when the market was down, we used to sell everything and, buy whatever we thought would work. Now it's like the opposite. I'm telling you, it's almost like a chess game where you can watch these guys just rig it out. You know what I'm saying? And you put up your stocks on your board, which we've mentioned to people, put up all your sectors and just see where they're going. And that's where you want to be for the day. And it very rarely reverses. So, That's what I see. But we're getting close to the opening, so I'm going to throw it to you to close us out on key things you're looking at, and then I'll come over the top.
Yeah, I would right now just what we've talked about. I mean, the action is outside of the equity markets at least until Friday potentially. I would keep an eye on what's happening in the commodity space. Watch for if we get a blow off top type move in silver, especially watch this move in oil off the recent lows again. If that signals a sort of a character change where oil stops going down on bearish headlines. And then one thing we didn't talk about that I would say to keep an eye on, I talked with Eric about this the other day, but with Bitcoin, Bitcoin coming up to its 50-day moving average, testing that from below. I think what happens around there could be a big tell for the risk sentiment over the near term.
Yeah, that's a good point, and I actually like I basically like the short side of that trade. I don't think it's like essential this instant, but I think that's gone a little bit too far. But my focus today is on the metals. I believe you're going to see a very large down move. Again, I don't know how fast, but I think you're going to see gold below 4,000 at some point, fairly quickly, which is only a 10% move, but that'll shake the trees. And if you go back on a chart, you're going to have to go back a while to get to that level. And I think the acceleration is going to happen fairly quickly. Just my opinion, and it's sort of what I said to you before. No one had access to this market. You had to buy. Listen, the only way to trade gold was to buy gold futures, and no one had a futures account. So just think about this. I'm going to leave you with this. Okay. What's the, can you pull up the average volume in GLD? I mean, the GLD volume is in the hundreds of millions of shares, or I believe, or at least silver. I mean, it's an incredible amount of volume. 10 million on GLD, a $400 name. And what about SLV? That's got to be way bigger. 62 million. So think about that. Yesterday did 100 million. Okay, it did double its average volume. What do you think? That was buying or selling? So that 100 million is what? 60 billion or whatever went into silver yesterday. So again, let's just keep an eye on it. Silver's given back half its year. It's not even the opening. I think you're going to see some very aggressive moves here. And you know what? Silver volatility is like 100. I looked at the options. They're all the same price up and down the chain. It doesn't matter what you buy. It's crazy. You can't even do spreads in there. So anyway, I want to wish everyone luck trading today. We like gold to the short side through options. Equities, I'll come on tomorrow and explain a trade that I'm looking at. It's a little bit more advanced for our service, but I think it's an interesting trade to play into Friday's catalyst trade. And that's it. It looked like bonds were going to go above 420. They came back in. Look at 420 as the Mendoza line off Friday, and we'll go from there. And I wish you a great day, Clint.